All right. Hello, everybody. And as people are connecting here, I will offer greetings. It's Mark Yusko from Chapel Hill, North Carolina. Actually, sunny Chapel Hill for the first time in about a month. I feel like I'm living in Ireland in the mountains. We set a record, all-time record for rain, and obviously people saw the devastation in Western North Carolina from the hurricane. That wasn't our issue. It just seemed to rain every single day here, but hopefully that will change. All right, we're going to dive into the topic today for Around the World, which is more Bidenomics or the return of Trumponomics. Does election 2024 actually really matter for investors? And so I've got the cartoons up on the top here. On the left, you've got what was going to be kind of the redo bout between Trump and Biden. Biden tapped out or got tapped out, however it went down. And Ms. Harris is now in the ring up against the Trumpster. So we'll talk a little bit about that. But at the end of the day, it's the policies that Biden created under Bidenomics that we're going to talk about. I'm going to make the case that it really doesn't matter who wins the election, actually, for investors. May matter for all of us as individuals. But for investors, I'm just going to say it really doesn't matter, and I'll show some data that supports that. But at the end of the day, the president doesn't do that much in enacting law that comes from Congress. So that's probably the more important set of elections. But really, at the end of the day, for investors, the trio on the right are really what we have to think about. They're the ones that have the missile launchers and grenade launchers, and they have gone all out here recently to make sure that the investing environment stays robust. So we'll talk about that. All right. Back starting with how do we get to presidential nomics anyway? Why do we talk about all these things? Calvin Coolidge said, I believe not in only advocating economy and public expenditure, but in its practical application and actual accomplishment. I think that's a really interesting quote from a long time ago, obviously not what we deal with today, that prudence in government expenditure, smaller government would be better. And if we actually do say we're going to spend, let's actually accomplish it and account for it, which is been going on lately that hasn't been the case. Give me a one-handed economist. All my economists say on the one hand, but on the other hand. That was from Harry Truman. Look, economics is called the dismal science for a reason. It's tough, and I love the on the one hand, but on the other hand. So economic growth without social progress lets the great majority of people remain in poverty while a privileged few reap the benefits of rising abundance. That was from Kennedy in the 60s. And I'll make the argument that, not only was he dead right, but unfortunately that has been the plan since 1913 and the creation of the Fed, that it really has been about rigging the game for the people at the top and keeping the masses in that less privileged state. Is actually how you maintain power. So, government's view of the economy could be summed up in a few short phrases. If it moves, tax it. If it keeps moving, regulate it. And if it stops moving, subsidize it. Wow. Fewer words have ever been spoken, particularly about modern government. You think about the tax burden that we all pay on everything, the just onerous regulations to stop innovation and wealth creation, and then just the massive amounts of pork that go to crappy projects in particular politicians' hometowns. It's just graft and money laundering if you call it what it is. But Reagan called it for what it was. and actually did something about it. In the new economy, information, education, and motivation are everything. I mean, we are in the digital age, and it is now not about manufacturing power. It's about the power of ideas, the power of innovation, the power of wealth creation, and taxes and regulation and subsidies are not the solution. So those guys were right. All right, so let's go back to the beginning of the year. We did the 10 surprises in January. The bingo card was as follows, and we're not going to go through all this, but that GDP would be stable, that we wouldn't have a recession, the Fed would cut rates. That was actually pretty good. I thought that was going to be wrong. The Fed actually did cut rates, third quarter, not second quarter, but still. S&P at new all-time highs, bonds are back. That one, not so much. But the one in green here, inflation stays cool, meaning it gets back to target. And that was a subject of a lot of debate. But that's actually a pretty good call. So alternatively, what did investors actually worry about? And two of the things that they were quite worried about, not only on the left-hand side, not only inflation and geopolitics, but the presidential election itself. So here we are on the eve of, not the eve, but a month away from the election. And part of the reason that people were worried about the election was because of this monetary policy lag that people perceived. They thought the Fed was behind the curve. And, in an election year, it's not shocking that the Fed would cut interest rates. They have a long history of doing that, despite the fact they're supposedly independent. Correlation is not causation, but it's curious. All right. So is Trumponomics versus Bidenomics the sequel no one actually wants? So maybe the election was the sequel nobody wanted, so they put the understudy in to make it a horse race. But when we look at Bidenomics versus Trumponomics, there are some key points and there are some key differences that make it at least worth talking about. So, Trump talks about building on the first term initiatives, getting his infrastructure bill, which he never got. He did get his tax cuts, and he didn't clean up the swamp, but he got one out of three. Biden, on the other hand, is all about his creation of new jobs. Now, I'm not really sure he should get credit for all the jobs that came back after the lockdowns. I'm not sure Trump should take the blame for all the jobs that were lost during the lockdown. And the Green Initiative is a real difference between the two. On taxes, Trump wants to extend the 2017 corporate tax cuts. Biden wants to reverse that. So that's actually tax increases. That is pretty big difference. Government spending, Trump talks a good game about cutting spending. The data, which we'll show, doesn't back it up. Biden, at least he's honest in the sense of he says, I'm going to spend a lot of money and I don't know where I'm going to get it. But we're just going to spend, and we're going to spend in all the places that you can focus on to buy votes, like student loan forgiveness, et cetera. But drug price stabilization, all. And the outcome is, in theory, if you actually did cut spending and left the tax cuts in place, which would encourage expanded growth, you'd get a recovery. On the other hand, if you raise taxes and keep spending, you'd have a less robust recovery, but not a disaster. So where did we even get this nomics stuff? Well, it came from Reagan, and Reagan, interestingly, coined the term, "Let's make America great again," during the 1980 election. And at the time, we were suffering from stagflation, kind of like what we had a couple years ago, high inflation with low growth. And he used the economic distress by basically saying to voters, are you better off than you were 4 years ago under Carter? And clearly the answer was no. So he won kind of in a landslide, unexpected. And in his acceptance speech, he said, for those without job opportunities, will stimulate new opportunities, particularly in the inner cities where they live. For those who've abandoned hope, will restore hope and will welcome them into a great national crusade to make America great again. All right. So Reagan's economic plan was so bold, it actually started this presidential nomics names. So we called it Reaganomics. And the most famous aspect was cutting taxes, particularly for high income earners and businesses. He called it trickle-down economics, or Art Laffer called it that. I always thought that was a funny name for an economist. Literally funny, pun intended. So they called it the Economic Recovery Tax Act of 1981, which, had a lot to do with very high rates of taxation falling, which I will actually argue is a good plan. And there is some data to support that. Deregulation, he said the only good government is small government, which again, I would tend to agree with. You wanted a more business-friendly environment, which there have been a number of presidents who have taken that stance, and I think that's a good one. Wanted to reduce government spending. Now, this is one where Ronnie was kind of an actor. He spoke his line really well, but it actually fell through. In fact, the national debt grew at the fastest rate in the history of presidents up to that point. Now we've eclipsed that mark, but he didn't quite come through on the third one. Monetary policy and inflation control. He appointed Chairman Volcker, and they get the credit for taming inflation. But there's another part to that story, which we'll talk about. All right. So Reagan did tax cuts, and shockingly to everyone, tax revenues rose. But it shouldn't really be shocking to anybody, because a couple things happened. One, we got an economic recovery. Now that was probably coming whether or not we did the tax rates, the tax cuts, because the economic cycle was changing and Volcker was done with his egregious rate hikes that plunged us into the double dip recession in the 80s. So you can say Volcker kind of sunk Carter, not Volcker saved Reagan. And part of the problem was that, Volcker was doing double counting on the inflation rate. So he was tightening more than he should have, but it did break the back of inflation. But the thing that also was happening is Reagan, and maybe it wasn't Reagan per se, it was Congress. Congress just went crazy on spending, and spending grew at about a 10% greater clip than historical averages. And that's the part that no one really talks about. So he basically set a course to spend his way to prosperity. And, on the left, you can see on the far left that, things were crappy, right? Down, 2% kind of recession. And they rebounded spectacularly. So it did work. I mean, Reaganomics did jumpstart the economy, and people got more positive. And there's a self-fulfilling kind of reflexivity about it. If you make people more confident and more positive, good things happen. So that I'm all for. And again, he was the perfect guy as an actor. He could really sell in a good way the plan. And the problem is on the right, the national debt grew at just a level that had just never been seen other than war. I mean, we had seen it during wartime, but never in peacetime up until the most recent president. So Reaganomics delivered on deregulation. So he delivered on the promise. And you can see the steady stream of economically significant rules by presidential year. I mean, on the right-hand side, Reagan basic flatline on new regulations at the federal level. Herbert Walker Bush came in and just said, screw that. We need to be in charge. And it was back to big government. Clinton actually tried to, do this national performance review and get rid of useless regulation. W came in and again, he was really being run by Cheney and Bush. And we just went back to straight up regulation. And Obama, accelerated that. And then Trump he said, well, if everybody's going to do this executive orders, I'm going to do them too. So we've just had relentless regulation, and it makes things more expensive. It makes things harder to do, and it makes us less competitive as a nation. So Reaganomics and Volcker do get credit for taming inflation, but there's more to the story. And part of that story was a pretty spectacular drop in oil prices around or post the oil embargo and the Iran-Contra scandal and all that stuff. So that was a big, big piece of it. So yes, they should get a lot of credit, but there was a natural deflationary element to oil price decline. And then the sneaky little secret as well is at the tail end of his presidency, you had this massive devaluation of the dollar through the printing of money. So, people blame Nixon for all of the problem. Well, yeah, Nixon created the environment in which politicians could print money out of thin air through the Fed. But Reagan was the first to really say, well, okay, we can issue a lot of debt. All right. So some more words of wisdom. I'm cutting taxes. We're going to grow the economy. It's going to grow at a record rate of growth. He is, if nothing else, the Donald is an enthusiastic and positive kind of guy. One of the major forces driving the decline in wages and the concentration of wealth at the top is the offshoring of American jobs overseas, reducing wages not only in manufacturing, but also across the economy. Our jobs are being taken out by the deal that Hillary Clinton's husband signed. I love that. Hillary's husband. NAFTA, one of the worst deals ever. Our jobs are being sucked out of our economy. Yes and no. I mean, again, data wouldn't completely support that hyperbole, but they're clearly, as jobs were exported overseas, those jobs disappeared. But what doesn't get reflected is the fact that the new industries that are liberated and created because we outsource the low wage, high pollution jobs to places like China, is we became more efficient and embraced the information age. And the true fact is there are more jobs today than any time in human history, despite all the jobs that were lost and exported and all that good stuff. So it's a little bit of a misnomer. But my administration inherited many problems across government and across the economy. To be honest, I inherited a mess. Kinda, yeah. I mean, it was on the verge of the lockdowns and COVID. So yeah, I mean, that's fair. At its core, it really has to do with self-respect as a nation. So that was what Trumponomics was all about. All right. Trumponomics philosophy is rooted in the Make America Great Again. Just borrowed / stole the idea from Ronnie. And everyone knows the red hats. But MAGA is an American political slogan popularized by Donald Trump during the MAGA or the President 2016 campaign. It also refers to the base, which is kind of interesting, or actually to an individual, which is kind of interesting. Slogan became a pop culture phenomenon, seeing widespread use, spawning numerous variants in the arts, entertainment, and politics. So Trumponomics focus on America first. Now, America first, key tenets of Trumponomics were tax cuts. So Tax Cut and Jobs Act of 2017, really more about tax cuts than jobs, but It basically was a handout to corporations. There was a little quid pro quo in exchange for them buying back stock. So that has been something that's been going on, which a little bit of financial engineering and helps people who own those stocks, like Warren Buffett owning Apple. So that was a big part. Deregulation, all talk, no walk. That was a total disaster. He claimed he reduced regulations with one hand, but then he ended up, there were more regulations on the other hand. So that was a non-starter. Protectionism is the hallmark of Trumponomics. It was always about, reversing deals like NAFTA, not doing the free trade zones, not doing the Trans-Pacific Partnership. So protect American industries, reduce the trade deficit, neither of which happened. Infrastructure investment, he proposed it. It got held up in politics and didn't materialize. Monetary policy, though he had no control, he did appoint Jerome, who at the time was Jerome, I call him the shapeshifter, right? He was Jerome the hawk, and tried to raise rates multiple times and caused a little bit of a problem. And although Trump didn't have control, he basically did threaten him. And then he cut rates and got things going again, so Trump could at least run effectively. So the idea that the president doesn't have control is a little bit of a misnomer. Immigration reform, Trump wanted to build the wall, wanted to limit immigration, thought that would increase wages. Doesn't actually work that way. Free markets work better, but that's okay. So Trump delivered huge tax cuts. I mean, they were big. But the haters or the opponents said they favor the corporations and the rich. Now, figures lie and liars figure. So, saying that the richest 1% got a bigger tax cut, well, of course they did in dollars. But in percentages, it wasn't quite as egregious as people want others to believe. So yes, the tax cuts were more favorable to the people at the top. But one thing you could argue, and I actually do argue this, that income taxes are dumb in the first place. They're anti-innovation. They're anti-wealth creation. We should be taxing consumption, not innovation and wealth creation. Trumponomics, all about protectionism. Trade wars are easy to win, was his famous quip. And I like the cartoon, hand me another tariff, as all the arrows come firing back, as if he didn't think Xi would fight back. Tariff man put in place more tariffs than any time since the Great Depression. And we've talked about this. It was a bad idea when Smoot and Hawley had the idea. It's a bad idea now. Never works. Economy and markets, though, despite all things I just said, did do well under Trumponomics. Now, one of the things you'll notice on the left-hand chart is there's essentially no difference in GDP growth between Obama and Trump. I mean, none. And then you get the lockdowns, and that's, again, not Trump's fault. But what that says is maybe the president itself isn't as important as people want you to believe. And really, there's something else driving the ebb and flow of the business cycle and liquidity cycle. And the stock market on the right did quite nicely under Trump, even recovering all of the, post-COVID losses, or post-lockdown losses. So, anyone who was looking at the core criteria, was Trumponomics successful or not, you'd probably have to say it was pretty successful. Now, Trump would tell you that it was the most successful thing in the history of successful things, and it built the strongest economy of all time. Not even close to true. So I mean, the 10 things on the left are things that they want to say are good, and not arguing that keeping communities safe and helping schools reopen and securing the border. I'm not a zealot on the border personally, but um, you know, no one can really argue with those top 10, I guess. But on the right hand side, Obama and Trump, 2.4, 2.5, it's kind of the same. And the unemployment rate, did continue to fall during Trump introducing Trumponomics, but perhaps that has more to do with the fact that boomers are aging out of working age population growth and the participation rate's been shrinking. Or, maybe Trumponomics did really do a lot of good things. All right. So on the other side, we have Mr. Biden, who says the change we need is fixing this broken economy from the bottom up, not tax breaks for the wealthy and huge corporations that ship jobs overseas. Now, that's a little conflated. It's the shipping of the jobs overseas that was kind of being fought by the MAGA crowd, but the tax cuts were real. The single biggest stimulus to the economy are the unemployment benefits we're paying. I find that statement confusing on a lot of levels. These people go out and they spend the money. They go out and they have to get by to do everything from paying their mortgage to buying food or just getting by. It has a significant impact on economic growth and continuation of economic growth. Again, it's just math that's not true. I mean, it's important to have a social safety net. I'm not arguing against that, but the better way to stimulate an economy is not to hand people money, but to get them back to work and to get companies forming new jobs. So having lower interest rates so people can borrow against their equity in their home to start a new business, or getting low interest loans from the government, or having a venture capital focus like they do in Singapore. So I'm not sure I agree with that statement. Don't tell me what you value. Show me your budget and I'll tell you what you value. That one I find almost amusing, in the sense that when you look at the Bidenomics budgets, it will show you what they value. So he's kind of damning himself by making that statement. But anyway, we're America, second to none. We own the finish line. Don't forget it. Okay, America first. America's great. The simple truth about trickle-down economics, it didn't represent the best of American capitalism, let alone America. It represented a moment when we walked away from how this country was built. Bidenomics is about the future. Bidenomics is just another way of saying restore the American dream. Okay, I mean, I think every president from Reagan to Trump to Biden is saying the same thing, except criticizing trickle-down economics without offering a solution. I'm not sure that's the right way to go back. So the Bidenomics philosophy is tied to build back better rhetoric like the New Deal. So framework presented was hugely ambitious, sought the largest nationwide public investing in social infrastructure. Not sure infrastructural is a word, but that came from Wikipedia. An environmental program since the 1930s, Depression-era policies, and the New Deal. Build Back Better was 3 parts: the American Rescue Plan, pandemic relief; American Jobs Plan, to put people to work by spending on infrastructure, particularly focused on climate change. And I'll show you some stats on that. Crazy stuff. American Family Plan, fund a variety of social initiatives like paid parental leave, et cetera. So, Bidenomics is a little longer, so I have to make the type a little smaller. But Build Back Better was about massive spending and even more massive money creation. So stimulus spending post-COVID, 1.9 trillion. We printed more money in the 3 years following COVID than in the previous 243 years of the Republic. it was absolutely stunning how much money we printed. The infrastructure investment, the bipartisan infrastructure law, allocated, now hasn't spent, but allocated $1 trillion to rebuild bridges, roads, public transportation, expand broadband. We've all seen the broadband thing, billions and billions of dollars with nothing spent. I'm like, well, why? Clean energy and climate. This is where the money's gone. The money has gone primarily to solar, which is, again, I mean, I don't disagree. Elon's all over Twitter lately saying, in the future, 99% of energy will come from solar. And look, enough energy hits the Earth's surface in 24 hours that would power all of the energy needs for the whole planet for a year. I get that, but we can't capture it and store it yet. So we still got to work on that. But tax reform, Biden proposed raising taxes on corporations and high income individuals, but it didn't get passed. Job creation, emphasize unions, strengthen workers' rights, to focus on job creation, particularly, again, in clean energy, social safety net and healthcare, child tax credit, and, giving more things to families like, lowering costs of prescription drugs, which, other than the cap on insulin, which I think actually was proposed by Trump, hasn't happened. Industrial policy and trade, the CHIPS and Science Act certainly is attempting to bring chip design back not chip design. We do chip design in the U.S. We do chip manufacturing in Taiwan and other places. So that's actually a good goal, but we haven't seen anything yet. So look, Bidenomics was all about this idea that you can print as much money as you want as long as you're the world reserve currency. We know that is a flawed, well, I shouldn't say we know. Most of us would argue that is a flawed strategy, and the proof in the pudding is in the eating. If you look at the death spiral that we are locked in currently, given the debt that's been created because of this money printing, with just interest on the debt now topping more than defense spending, we get in a very precarious place. Government spending is projected to rise at a parabolically increasing rate, and the gap between revenues, the only time revenues have exceeded spending is during the Clinton period, where we had a slight surplus. Other than that, politicians are going to spend. Irregardless of Trumponomics or Bidenomics, all of it led to higher deficits. And this is the stat that just kind of blows you away, is the amount of money that has gone into solar, but we don't really have much to show for it in terms of U.S. solar efficiency. Most of the solar still comes from China. We had all the big, spectacular write-offs like Solyndra. So I just not sure this is working the way we want it to work. Now, Bidenomics on the left was supposed to be very broad-based. It was supposed to be about infrastructure, manufacturing, and clean energy. All we really got was clean energy. It was supposed to be about educating and empowering workers training. It was supposed to be about, promoting lower costs, which I find this one kind of comical. They try to blame corporate greed on rising prices when rising prices are actually a result of the money getting worse because we printed too much. On the right, it's a pretty bad scorecard. It basically says that, other than spending on climate, we've done nothing. And that's pretty crazy. I mean, those zeros are just crazy numbers. So one thing that did explode in the early days of Bidenomics was spending on, vaccines. And you can see on the right-hand side in the red and the blue, the companies related to the mRNA vaccines exploded. Their stock prices went crazy. Was it a shock on the left that the highest lobbyists' expenditures were by pharmaceutical companies? Now, Lilly in yellow, that's a little different. That isn't, no one's being forced to take Ozempic. They're taking it because, they can lose weight, at least in the short term. So, good on Lilly for finding a use for their product. But what's interesting about the surge in spending and the surge in these stock prices is now all of the stocks are now under where the S&P is over the period since Bidenomics started. I find that a little bit curious. All right, deficit spending, it is a staple of all of them. All of the presidential nomics, whether it's Obamanomics, Bidenomics, Trumponomics, it doesn't matter. They all spend too much. Now, the Biden budget, the current budget, it's taken it to a new level. I mean, we are now budgeting at levels of deficit that were really almost incomprehensible before the global financial crisis. So Obama started to popularize it kind of in response to the global financial crisis. We kind of got some fiscal discipline back in the mid 2000s, 10s. And then, COVID just blew that out of the water. And I guess people are like, oh, we didn't die, not literally die, but we didn't blow up by overspending in COVID. So we can just keep overspending. I'm not sure it works that way. Inflation is always and everywhere a monetary phenomenon. The risks of Bidenomics, the T-shirt that they're selling, inflation for dummies. The Economist wrote a good story that it's not just inflation. There are other risks to some of the tenets of Bidenomics, but the big one is that inflation, or I will argue not inflation, but devaluation of currency, which makes it harder for people at the lower end and easier for people at the top, is really what this is all about. So the Bidenomics plan was to improve the cost of living. Right? He said he wanted to bring down the cost of living for the average family. That is just not happening. I mean, some of the numbers on the right-hand side are just staggering in terms of the multiple. I mean, if you just did a normal inflation rate from the 70s, we're orders of magnitude worse off. And it's, mostly stuff as the result of things don't get better, right? The houses don't get better. It's that the money gets worse. So the issue today is a lot of people are saying we're on the verge of this not double dip, but double spike in inflation. And that despite the fact that inflation has come down to 2%, if we keep on with the policies that are in place right now, we're going to end up with a nightmarish kind of, late 70s, early 80s stagflation debacle. So GDP growth has been solid under Bidenomics. I mean, that's true. It's actually a little even higher on the left-hand side than Bidenomics. I'm sorry, than Trumponomics. Wage growth did jump. And again, people jumped on it, but it didn't jump for the right reasons. The government handed people money. That was a one-time deal, and then it went away, and all those savings went away. So one of the things you'll notice is, the Trump market was volatile but upward sloping. The Biden market has been volatile and kind of range bound. Well, why is that? It's because people are realizing that the stimulus money has run out, and now we need growth again, and spending on government programs and increasing taxes on corporations and individuals is kind of the antithesis of a pro-growth strategy. So I think that's what the market's kind of telling us. Now, the U.S. economy is chugging right along. I mean, now we've fallen back from the, little bit better 3%. We're starting to head back to that magic 2%. Well, not shocking. I mean, that's a combination of 1% working age population growth plus 1% productivity growth. We're going to be at 2% probably for a very, very long time, irregardless of who wins the election. On the other hand, the CPI number has come down. Now, despite the political ads that claim that the current administration has cut prices for consumers. It's not true, right? I mean, prices are rising less quickly, but that's not the same as a cut. I just had a hamburger the other day at the airport for $17. That is not a falling price. I mean, it's a decent hamburger, but it wasn't worth $17. But that's what it is. So one of the things that is going according to plan every election year, there is, not shockingly, a fall in the price of oil. Well, why is that? Well, there is a perfect inverse correlation between presidential popularity and the gasoline price. So there has been historically some deals cut with Saudi to keep oil prices low during presidential election years. And again, it's both sides. It's not one side or the other. And what we're seeing is a steady downward march of oil prices from the high 80s down to $70. And that's despite economic growth being higher than anticipated and oil demand picking up, particularly in places like China. So that's helping keep the lid on inflation. Money supply growth, though. So money supply growth had gone negative for the first time in 130 years, and it has just turned back to positive and is actually growing at a rate similar to what it did in 2020, 2021. That is likely to lead to more dollar devaluation. And you notice I don't call it inflation. People will call it inflation, but to me, it's currency devaluation. It is not inflation. Inflation is caused by excess demand and limited supply. This is just dollar devaluation. So our shape-shifting Fed chair went full J. So remember, he's Jerome the Hawk, J the Dove, or J the letter J, the pusher. Now he cut 50 basis points, which was a little bit unexpected, not completely unexpected. And everyone's bullish, particularly people in the crypto world. They're super bullish, giga bullish. But they're, and on the right, what it says is as long as we only have a growth scare or normal growth, stock prices go up a lot after rate cuts. The problem is if we actually have a recession, then it's usually not so good. So if the rate cut is because they see a recession coming, then markets are probably going to do less well. If it's, prophylactic and preemptive, and then things will be okay. Look, in June, it looked like a Trump thump. I mean, it was 2/3 plus for the Donald. There was a little handoff. Joe tapped out, and now it's a horse race to completely mix all the metaphors in sports. But it's a toss up according to Polymarket at this point. It's going to come down to a couple states, of course, one of them being North Carolina, where we are. If it's a toss up, then the markets are saying, you know what, we don't really care. And the market has just been chugging along. Now, the one thing that's interesting here, one of the surprises this year was that bonds are back. Well, bonds have not been back, and bonds are basically flat for the year. Europe is doing okay, up 10%. Emerging markets, a little better, up in the teens. But Japan and the U.S. and tech stocks up in the low 20s. But what's interesting, gold is up almost 30% and Bitcoin's up almost 40%. Well, that's because they are dollar devaluation assets. Remember, those things don't go up. It's the currency gets worse, and we price Bitcoin and gold in dollars. Now, U.S. equities are, I love this chart on the left. How should we say this? Highly valued relative to the rest of the world. I mean, we've just never seen anything like this. And it's a combination of, we're the center of the universe and NVIDIA and tech. And there's a lot of things that go into this, but it makes the Nifty 50 bubble and the internet bubble look like walks in the park. the chart on the right is the troubling chart. There is no precedent. There is no time in history where when you had sharply declining interest rates, you got higher profits. And just let that sink in and look at the correlation of the red line, the profit growth, and the black line, the US Fed funds. There is no time where you get falling rates and rising profits. You just don't see it. And it makes sense, right? Because you don't cut interest rates when you think things are good. You cut interest rates when you think things are less good. You raise interest rate when you think things are over. That's a tongue twister. Are overheating. So global central banks are piling on. Global central banks are cutting rates at the fastest pace since 2020. They're almost at global financial crisis levels, but the rate of change is second only to the COVID time. So somebody sees something, and I don't know what, but this is concerning. But on the other hand, liquidity drives market, and liquidity is about to explode higher, and that's probably really, really good for assets that are denominated in the devaluing Western currencies. China, not to be left in the dust. They said, anything you can do, we can do better. So yeah, Jay, you took out your bazooka. Christine, you took out your bazooka from the first slide cartoon. You notice that both Christine's bazooka and Jay's bazooka were single shot. She took out a 4-shot missile launcher. So they cut interest rates, they cut repo rates, they cut the RRR, they cut everything. They're actually talking about cutting people's existing mortgages. They are throwing a lot of money. I mean, a lot of money, hundreds of billions of dollars in stimulus. And so far it worked. I mean, David Tepper came on TV and said, they asked him, what do you buy? Should you buy Alibaba? He says, everything. I'm like, what do you mean everything? He's like, you should buy everything. And I've only said this one other time. And that was back after the global financial crisis in the US. And he was right then. And it looks like he's right now. Here's the crazy thing. The last 7 days erased 938 days of losses. So the Trumponomics and the extension through Bidenomics of the Trump tariffs and the beat down on China, their market went into free fall, and it had been basically falling for the better part of 4 years. And in 7 days, you made all of that back. So, all right. Latest podcast around the world. Apple changed their format, so now you got to deal with the black and purple. But we just did our last around the world was the 70s redo. So if you want to go back and listen to that, you can talk about bell bottoms and all kinds of fun stuff. Then on the Hedged podcast, we just did a very cool thing on who is infinitum. We should have called it, why is AI the biggest thing since sliced bread? Because it's really all about AI and this company Grok that they're big investors in. But John is a really interesting guy. He's boyhood friends with the founder of Grok, which is a company that makes AI inference chips. So we should have called it an AI, and we would have got more people to listen, but you should definitely go back and listen. It is a great conversation with John, and I think you'll really enjoy it. Digital currents, every week we do our ABCD news roundup. And last week we talked about, Sam getting his big payday and Salesforce becoming an AI company. I love that. And why Bitcoin options won't be as big as Bitcoin futures, but they'll certainly be interesting. And, everyone should read these 3 books, Read, Write, Own, The Bitcoin Standard and Bitcoin Billionaires. All right. Well, I appreciate, wow, I even made it under an hour. I appreciate everybody's time. We'll find out what happens with the election here in a few weeks. And I wish everybody a continued happy football season. If your team's doing well, my team's not doing so well, so I'm having a less good one, but that's all right. So I will talk to you all again soon. Thank you.